Okay, this is Mark Bow. This is part 3 of our North Central Valley webinar this morning, and we're grateful for those of you who have hung with us for all 3 of these segments of the webinar. This will be another 10 minutes webinar, and in this particular one, I'm going to actually show you survey-to-survey new home market changes that have occurred in this particular market area. This is something that I did a couple weeks ago, and a lot of people don't realize that we have a great database in terms of overall transactions. We have just as strong a database in terms of new housing audit information, a huge database where it's built upon us visiting new home communities each quarter and showing you what the overall results of those new home field audits are. So I'm actually going to go to my website. I'll go to products and generate online reports. From that, I'll go to new housing development reports. Now, there are all kinds of charts and graphs and reports that you can generate. The survey-to-survey changes is just one of those reports that you can create from this, and it's created a little bit more differently from the others. And so I'm going to go through the same exercise where I'll pick off those 3 counties that we've been dealing with in the North Central Valley: Merced, San Joaquin, and Stanislaus. And this will show you the new home communities that are offering product in this particular market. I'll accept all of these various submarkets that we've identified in this particular market area. And finally, it will take us to that sheet which shows the actively selling new home communities. There's a total of 37 actively selling new home communities, and you can get very basic information in this first listing of those particular communities that are selling throughout this 3-county area. Now, there's a few things you can do here. You can also choose those that are on hold and update your list, and we'll see if this 37 number changes at all. If it does, that means that there are communities that have been closed temporarily, and there are 3. We've increased it to 40. Now, to run the survey-to-survey, we're actually going to choose those closed ones as well, because we want to go back into the past and to when we started this survey and really show you what those changes have been throughout time. And I think we can get enough survey data in this particular case to really show you what has happened since this market fell apart and since we've begun to experience some stabilization. So we have a total of 478 actively selling and closed communities and communities on hold in this particular market area. Once we've selected all of those, we'll go to next. It will actually show you a map which presents all of those audited new home communities through time. And you can see this pie chart which actually breaks down the sample that we've chosen by density. So you can see the various lot sizes and what's represented in terms of the number or percentage of new home communities within each one of those density categories. And finally, we'll go to the map and show you that plotting of these actively selling communities. Once we've gone to that map, we'll actually go to Generate Reports, and you can see that list of reports that are available. Now, since we've chosen everything that is closed out, there's some reports that we don't want to pull. In fact, the only one that really is necessary to pull with the inclusion of all of those sold out developments are those that is associated with the survey-to-survey change. So here's our map. There's all of our actively selling communities. We'll now go to Generate Reports and actually choose the survey-to-survey report, and we'll compile that, and it should pop up almost immediately. And here it is in an Excel spreadsheet similar to what we've done in the past. Now, there's a couple of different versions of this that I want to show you. One, you have to at least know where the data is to create it manually. This first one pops up automatically. Now, the first or default version that we show you shows you a total of 9 quarters. So you can see a 2-year change, which is shown in these final columns here, in terms of price, in terms of sales volume, price per square foot, unit size, number of actively selling communities, and so on. You can see what's happened in this particular market area since second quarter of year 2008, where we had 197 actively selling developments. Look where it is right now. Now it's back down to 39 actively selling developments. And so as communities have closed or gone into bankruptcy, they haven't come back onto the market, at least not yet. And so the number of actively selling developments is only a fraction of what it was a couple of years ago. And you can see what that has done to to inventory, finished lot inventory at actively selling developments, where we had over 10,000 during second quarter of year 2008. Now it's fallen to about 2,000 during the past 24 months. Again, a reflection of projects that are selling out or closing down before sellout. Now, there's a lot of finished lots that may still be out there, but they're not represented at actively selling developments. And that's what this particular chart shows you right here. You can see what the overall trends have been in terms of sales volume, both in terms of total volume and volume per development. The overall average right now is 1.7 sales per development. Not necessarily a great sales rate, but it's higher than where it was 12 months ago. And it's about last quarter, and it's actually on par with where it was 2 years ago. In terms of survey-to-survey net price changes, you can see that we hit a bottom of $117 per square foot back in second quarter of year 2009. We've come up a little bit from that. We're still well below where we were 24 months ago. You can see what's going on in terms of concessions. As builders have dropped price, they've actually reduced the level of concessions. So here's one view in terms of survey-to-survey changes. Let me actually take you to a second view that I've created. Before I do that, let me actually show you some things that you need to know about the spreadsheet. You can see here's column A, which has our titles, and then I skip to column S. S is in Sam. In between here, there's a lot of information, and if you know how to use our information, you can actually just unhide those columns and see what's there. And if you do that, you can see that we actually have survey data all the way from the very beginning of year 2004 and forward. Now, it looks a little messy in terms of the formatting of the charts, which is understandable. Here's a version where I've actually cleaned that formatting up a bit. What I've done is I've actually hidden all of those columns except for second quarter of each year. So I'm showing from second quarter of 04, comparing it to 05, 06, 07, all the way to second quarter of year 2010, and that's what pops up on the chart. This gives you a much better idea as to what's really going on during the past few years in this particular market instead of the past few quarters. You can see what's going on in terms of sales volume. We've gone from an average sales per development of 4 per month per development down to 1.7 sales per month per development. You can see that we formed a floor during the past couple of years in this particular market. You can see what's going on in terms of overall inventory. Now, months of inventory is still high, but overall inventory is very low, at least that inventory, that finished lot inventory that's represented at actively selling developments. You can see this huge swing in price change where we hit the peak level in second quarter of year 2005 at $194 per square foot. That was up from $143 per square foot a year earlier. So we had this huge jump in a 12-month period from year 2004 to year 2005. And then it really began to crash hard. You can see the results of that crash, where we hit bottom in second quarter of year 2009, and we've actually come off the bottom a little bit. And you can see what the overall patterns have been in terms of overall concessions. So again, if you're interested in this particular chart, we're happy to send that to you as a sample as to some of the information that our website provides. Simply contact my associate, Judy Duell, or Sandy Rivera, and I'll show, the very last thing I'll do is show a little bit about our capabilities and our contact information. We have full consulting services as well as online website services. And here's our contact information if you want a sample of any of these tables that I've generated today. I hope that gives you a good feel as to what's gone on in this particular market area, both in terms of actively selling new home communities as well as the transactions that reflect foreclosures, foreclosure sales, new home builder closings, and traditional resales. We hope you also understand the importance of really examining the economy, what job changes have done during the past 12 months. I think that's crucial. I won't do a study unless I look at the job market, those overall trends, and my forecasts associated with that. This has a lot to do with the overall health, price support, and absorption potential of a given market area. We thank you for joining us. We hope you'll join us next week at 9 a.m. on Wednesday, July 14th. Thanks. Take care.